All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Starting a couple of minutes early today. I did miss yesterday's after-market recap for you guys. My apologies. Had some technical issues at the office. No internet connection. I was going to run late trying to head home. So, again, my apologies. But we'll go over pretty much with the Fed. Now we have some GDP numbers. Again, technically recession. Yeah, it happened, at least an advance notice. Uh, let's go over it. Bottom right-hand corner of your screen, black logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit like button if you like these videos. Let's go ahead and get started. We have a lot to get to. That's why I'm starting early. And good morning. All right, Dow futures are up 6 points. Carlos, how could that be? GDP, recession, it's red. Oh my God, the world's over. We'll go over that. NASDAQ down 4. We were down a lot more earlier today. S&P is green, 40.28. We're also 2,000 up 0.35%. Crude oil testing that $100 level. Watch that. 99.10, $3.15 for gasoline, flat. 10-year yields starting to hit down 2.728%. We'll go over what the bond market is telling us today. Dollar index was green nicely this morning near 107, now trading at 106.49. Not a huge move, but one for the dollar. That's up about 4 cents. VIX down 2.11%. Not a lot of fear out there, I guess, or just low volatility. 22.75. Gold futures are bouncing on a weaker dollar. 17.64 up 1.5%. How about silver futures? 19.62 up 5.51%. That's thank you to the weakening dollar. Euro dollar doing better than the dollar doing better than euro, obviously. 101.63 with some German GDP numbers that came in. 101.63 is the number. 134.77. The yen is getting some bids. That usually does lead bond yields. So let's keep an eye on dollar yen, especially my Forex traders. You may want to play a swing here because we'll have more downside. Let's break it down real quick, just for Forex. We'll just go to the Forex side for a second. Let's go and bring up a 2-year daily. We're going to test the 50-day moving average, 134.19 on dollar yen. You could probably scalp it there. The trade was after 136, but again, 134.19. If you do break that, then you're looking at around 132.28. Not a bad trade if you're looking for that. Bitcoin is up this morning, 23,165. Why? The good old dollar is down. Ethereum, 1642, up 3.46%. Copper futures are up 1.78%. Let's go to S&P futures and take a look. So yesterday we did play calls and we did have puts this week. So kind of back and forth trading. We had a kind of a slight inverse head and shoulders on the 1-hour chart. Again, kind of looking at this megaphone formation. We're starting to push a little higher. Don't get too excited. 40.30 will be my alert for more upside. We broke that already, so let's go ahead and add it again because we rejected it. 40.30, or if you want to be a little more prudent, you can go 40.42. That is your wick high. So again, I would go long around 40.30. I'd put a stop at 4,000. If we break below 4,000, we're definitely going to test minimum 39.80 as we'll follow this trend line. So why is the stock market higher on a GDP print that not only missed, this is advanced GDP print, but now is reflecting a technical recession, 2 consecutive quarters of negative GDP growth. You can't change that definition no matter who you are. It's like gravity. It is what it is. No matter if you believe in gravity or not, if you jump off a bridge, you're going to fall. And that's pretty much, we are technically in a recession. Now, why is the stock market higher? Jerome Powell and the Fed, that's why. They said a lot of things and it sounded very dovish. Things that said out there, the thing that stood out to me was the fact that he said we are already at a neutral rate, meaning the level that they want to be at to not over tighten or over loosen. So if we're technically in a recession, did the Fed accomplish its goal? Well, they didn't have a soft landing. Hard landing? Well, we don't know how severe this recession is. Again, if you want to go back to the conference calls of Capital One, Bank of America, strong consumer. How about Visa? Great report. American Express, great spending. MasterCard also beat. So the consumer, at least in terms of the corporate reporting, is still strong. Now, again, kind of anecdotal evidence is yet to be determined. Everyone is different. but at least that's where we are. We also had a lower than expected jobless claim number. The jobless claim number today, 256,000. Forecast was 250. Sorry, it was higher than expected. My apologies. GDP was worse than expected, 0.9% versus a 0.5% to the upside. So that's a miss. And again, negative. So recession, the R word. GDP deflator advanced 8.9%, forecast was 7.2. Core PCE prices, this is what the Fed watches. PCE, we're going to have another PCE number tomorrow. 4.4%, forecast was 4.4, so it did meet expectations. Again, you could find a silver lining here, or you can find the worst case scenario. So what the Fed is telling me here, at least in the market, why we soared yesterday, was that this may have been a possible pivot where they're now data dependent. But he also hedged his bets by saying we could have a surprise rate hike or even a aggressive rate hike. But it sounded like on his tone that he was going to be less aggressive, meaning less hikes, slowing hikes, no hikes, or cuts. We just had two 75 basis point hikes. Keep in mind, that is a lot. That's the most we've had in recent memory, probably ever, from the Federal Reserve. So obviously it's doing something as commodities have fallen this quarter, nearly 30 to 40%. Even crude oil is in a bear market, down from 130 to around 95 to as low as 90. So that's a bear market. Gasoline too, 41 days of consecutive lowering prices on gasoline. We have a number from Walmart, that not number, but the forecast from Walmart saying that inventory build, consumer slowdown, at least on their product end. So we see Meta with their numbers, not as great. Obviously, they switched up Instagram. It looks like crap. So Facebook is getting harder and harder to own, in my opinion. Even with their price action or even them being cheap, I'd have to take the PE ratio on them. We also got some layoffs from Rivian. We also got that number from Qualcomm saying handsets, smartphone handsets demand for their chips are down. We also have the ultimate consumer spending company reporting today. That's Apple. We also have the largest e-commerce company in the United States, if not the world. I don't know if Alibaba's there, but Amazon. So we also have that. Google at least beat on their ad spend. We know that. Microsoft had strong guidance for 2023. So it's a lot of information that we kind of have to hurdle ourselves into which side are we going. So again, we can look at the S&P price action. We can read the transcripts from the Fed. We can hear analysts over and over. Here is my contention. Sometimes we have to eat our vegetables. That's what I'm going to say. We have a recession, so be it. That's where we are. Okay, fine. So if you want to take a look at 10-year yields with me, here's the last 2 years. You could see a nice head and shoulder pattern. And we know what happens when we have a head and shoulder pattern. We go lower. So that's exactly what I'm expecting. If you guys remember, I've been long TLT for a little bit now. So again, I would stay long bonds here, at least government bonds, as I expect rates to go lower. Why do I expect rates to go lower? Because I do believe the Fed is basically announcing their pivot. Now we have that recession backdrop. The Fed doesn't want to over tighten either. The only thing that's going to throw this off a wheel is really the PPI and CPI numbers in August. If that goes higher than expected, then the Fed is really stuck because they don't know what to do. But if the consumer CPI report and the PPI report do come out better than expected in August, if at least slowing, then you're going to see possible rate cuts in 2023, if not at least a full pause. That's what the Fed fund futures is pricing in. So again, I like looking at the bond market and the dollar for giving me what the Fed is doing because they're doing the heavy lifting. So we have a nice head and shoulder formation here on 10-year yields. Where do you think we go? I think we can go to 25.75. Again, that's 2.57%. Doesn't mean, we can't go lower, but again, that would be my first target. We're below major moving averages. This is the 10-year yield. How about let me go ahead and expand this because I also want to show you this. Let's go ahead and put up a chart of the last time we had a Fed tightening program or Fed tightening cycle. That was in 2018 going to 2019, if you guys remember that. You could see there that we hit that peak of around 3.25%. We broke that peak to around 3.47, 3.48, or almost 3.5 just last month. But you could see a pretty much clean rejection there. So again, the market is telling us that that at least the Fed is kind of telling us that the market cannot handle higher yields, and the bond market is calling the Fed's bluff, and they're saying you're not going to raise rates longer term. You'll probably raise a couple more, but again, you're not buying 10-year yields. You're not buying bonds if you're expecting rates to go higher, because then your bond value is going to go lower. So again, look at that comparison, possible double top. I wrote that on Twitter last night. Let's take a look at the dollar together. And again, this is a weekly chart. This is the last 20 years. And you could see just a straight trend line that we've been talking about. And you could see that 109 and a quarter level near 110 is resistance. It tapped it pretty close to the nose and rejected. So again, the dollar is going to follow yields. If we know yields are going to fall, then the dollar will fall too. The dollar index is not just the strength of the dollar alone. It's the dollar versus the basket of currencies. So Forex traders, use this to your advantage. If you're short the dollar, find other currencies that have been extremely weak, euro, yen against the dollar, and trade those. That's something that I would be watching definitely in terms of Forex trading. So that's where we are, the dollar and the 10-year. Yields are going down, the dollar is going down, and take a look at S&P. I'll bring it up on the hourly. And again, kind of hovering higher. I mean, we're down 4 or 5 handles even post this GDP number. Let's see how we open at 9:30. But again, looks like the market is kind of cheering a possible dovish Fed because of this number. So I don't think that's right academically or economically, but I'm not an economist either. But again, here we are. This is what we got to do. So to be completely honest, I think we go higher. I think we're going to go ahead and test the top range of this megaphone channel. We'll go and bring up on the 4 hour to kind of give us a little bit of an idea. And you could see here that 41.16 seems about right. Again, do we hit that top end? Well, again, that remains to be seen. We have some resistance when we had a triple bottom right around 40.74. So again, that would probably be my first target if we're looking at S&P longs or going and buy some risk on the market, meaning trading high betas, technology, whatever is moving in the market. But again, I expect the stock market to go higher just because the dollar is coming down. So the dollar is going to be our guide. We're going to follow the dollar. The dollar is going to tell us everything we need to know, at least in terms of S&P and risk on. And again, when the dollar goes down, Bitcoin goes higher. When Bitcoin goes higher, NASDAQ goes higher. When NASDAQ goes higher, high yield bonds go higher, and so on and so forth and so on and so forth. It's important to remember these things, to know why things happen. Not the chart is going to tell you what's happening, but the macro is going to tell you why it's happening. And that's why you need that macro information in your arsenal for you to be a better trader and a better analyst, knowing why things happen. So when people ask you, you can sound really smart. And then basically you'll be thinking ahead of the CNBC neckties because everything you've been talking about is already being said once again. Let's answer some questions. Good morning. Javier says, good morning. How do you explain stocks rallying with revenue lower than expected and the rate hikes? Pretty much a dovish Fed. Follow the Fed. The Fed is your friend, at least in terms of trend. That doesn't really rhyme. But again, the market is just really holding up on the fact that we got the recession word out of the way. It'll be front page news tomorrow. Yes, there will be some political heat. I don't give a damn because all I care about is this. I'm pretty sure the White House will spin it one way or another. Nothing new with politicians, but we know the drill. It's important to see that the recession may cramp down demand. And if demand goes down, the prices go down. And if we get lower rates or a dovish pivot, that by definition means we're not going to get higher rates. And by definition, we're not going to have a stronger dollar. By definition, we'll have a weaker dollar. By definition, stocks are priced in dollars. Commodities are priced in dollars. Oil will bounce, commodities will bounce, stocks will bounce, Bitcoin will bounce because of the dollar. That's really it, man. I mean, there's no real good news feeling. It's more of a bad news is good news. So I say eat your vegetables, have the recession so we can get out of this and see if we can get some monetary easing. So again, it may not be the best long term in terms of deficits, but we're not worried about that sort of thing. We need to pay the rent today, right? Good morning, John. So a lot of stuff that I've said may not be accepted, obviously, by many academics, I'm sure, on Twitter. But again, price action is key. That's really going to tell us everything. So again, I do expect this to go higher. Let's place an alert at 40.30. If we break above that, if you want to kind of move that range to 40.42, that's fair too. That's the wick high from yesterday. That's where we topped out at. We can call that resistance short term if you want, but we're still in that megaphone formation. If we break down below 4,000 level, that's a big gamma level. When we broke that, we started rallying to the upside rather quickly, a quick 42 handles. A lot of shorts may have been closed there at 4,000, equal to the candle close high of around in July 22nd. That was just what, 6 days ago? So we'll call it last Friday. Was that it? Last week? And again, we rejected that. We came down below this trend line. We tapped the 200-day or came close to it, came back up. So below 4,000, I'm watching 39.80 for a continuation down. Maybe we get a retest of 39.47. Am I sold on this price action saying, oh, yeah, for sure, we're going to go higher? Well, that remains to be seen. I mean, we have Apple today. Apple is the largest company in the S&P. It is the largest consumer discretionary technology company on planet Earth. If they saying the consumer is slowing down, who knows? How about Amazon? Let's say UPS had a weak number as well, logistically, higher costs. Amazon has their own logistics. How about Walmart being in comparison to them? Retail. Walmart put a bad guidance out there. Amazon, I'm a little worried about. That's the one, there's a lot of things going on. In terms of at least cloud, they're going to do well because Microsoft did well on their cloud and so did Google. So let's take a look at Amazon and see if we have any edge to trade this. We'll go to a 4-hour chart. Now, again, I wouldn't want to trade the number, so I want to definitely buy some time. But we'll go and throw some lines on the screen and see if we can find anything fun. So kind of this trend line here, not really anything special. We can kind of connect a couple of points here, and we'll connect that to the right. So again, an ascending kind of wedge formation, channel kind of tightening on the 4-hour, not a ton of edge. Do I really want to trade that? Right in the middle of everything, smack dab. So let's take a look at the daily. Any gaps to fill? Anything cool? Anything nice? Nope, nothing there. Seems to be that resistance will be around 125, 126, and your support will be around 110. I would not want to touch Amazon, but my assumption, kind of looking at the rest of the numbers in terms of UPS and Walmart and their guide, I think Amazon's going to be weaker. In terms of Apple, Apple's a wild card. Again, I love Apple. But again, the writing's on the wall. I've seen these AirPods for sale. So could be a miss. I would not be surprised if we get a miss at least on one of the top, I probably on revenue, but a beat on EPS on profit maybe. But things can happen, and that's why I'm not in a rush to trade today. Again, we're up nicely, somewhat off the lows, but it seems like the trading world's kind of wincing and seeing that what else can be the next shoe to drop. So again, there is definitely an argument to go long. There's an argument to go short. We may be a little overextended. Let's go ahead and throw in an RSI reading and see what that's telling us. We'll go to add study. We'll go to momentum. We'll go to RSI. Where is this? Oops. Oh, I had the wrong thing. Let's see, profile studies, momentum studies. There we go. Okay, S&P on the daily is tapping overbought territory on the 1-hour. Not much to tell us, but again, we could still break above like we did yesterday. But it was oversold, came down, and now we're right below overbought. Excuse me. So let's go ahead and bring up the 4-hour and see what that tells us on S&P futures. Near overbought. Okay. And let's take a look at the daily. Daily is on the side of overbought, but not at overbought readings yet. You still got about 10 more to get to 70. So at least on the daily, we're not exactly at overbought, but on the hourly, we're getting kind of close to it. So what was the last time we got to that level? Right around 40, 42. So let's go ahead and do that. Let's move our buy. If we break 40, 42, that would be the peak on RSI, and then we could continue maybe higher, just depends. But we do reject pretty much every time that's happened. But again, 40, 42, I'll keep an eye, but for the most part, this number here in terms of GDP is not that big of a deal so far. I mean, at least what I'm seeing. Kind of stuck in a range. The move was yesterday with the Fed. Every time we've had the Fed the day after or 2 days after we've fallen, that could totally happen again. Again, let's keep an eye on 4,000. 4,000 will be our level. If we break that, I want to see 39.80. If we break that, then 39.47. If we break above 40, 42, we know how high we can get. We can start talking about getting to 4,100, 4,115. Definitely. I mean, it does have bear market rally written all over it. or it could be just the bottom. We really don't know. The market just changed daily, and now we're starting to get to overbought conditions again on S&P futures. So keep an eye on that very closely. Been pretty prudent this week. Only two signals were sent out for the Discord. Qs, we had Qs puts and SPY calls both hit. Again, there was so much going on. I'm very proud of the fact that we've been extremely patient, and we're going to stay patient as we get more data coming in. If anything does break, we'll let you guys know on Discord, as always, on the market blog. Keep it locked on Twitter. I will be tweeting out throughout the day. Have a great rest of your afternoon, and let's see what happens with Apple and Amazon after the bell. I'll see you guys at 5. Cheers.